Hi guys, welcome to the first video in the Crypto Chiefs Crypto Trade Master series, where we are going to be looking at Trendlines today. Now I wanted to produce a series of videos because when we started out with the signal group, the idea wasn't just to be a group that gives signals. We want to improve the success and knowledge of traders all over the world, all at different levels, to bring you better success. So we're going to be doing a series taking a look at different indicators, different tools that you can use to better your success with trading. So firstly, what is a trend line? A trend line connects low and high points of candles, so think dot to dot, and it helps us to identify support and resistance points as well as chart patterns and channels. So the criteria of a trend line, if the candle or the wick touches a line twice, it shows a possible trend, whilst 3 or more touches confirms a stronger trend line. The more spread out the touches are across the line, the stronger the trend confirmation. If this isn't making sense at the moment, don't worry, because we're going to take a look at some live examples in a minute. The longer the time frame, the more confidence we can take from the trend line. So for example, a trend line on a 1 day or a 4-hour chart can be better trusted than a 15-minute or a 30-minute chart. And the longer the line, the higher the confidence we can take from the trend. So how to draw a trend line. So use the trend line tool on your favourite charting program. Personally, I use TradingView. And you connect a low point to another low point or a high point to another high point and simply extend the line to check for other touches for a stronger trend confirmation. Try to draw the trend line by connecting the candle wicks. So they're the lines at the sticks on top of the candle body, but it's not essential. A strong trend can still be confirmed by using the candle bodies, and the wicks outside of the trend line would then show a fake out. And again, we'll be looking at an example of that in a minute. Personally, I very rarely use less than the 1 hour time frame for drawing trend lines. My preferred is 1 day and the 4-hour charts to get an overview of the trend, and also the 1 hour for trading too. So the first example here, we are going to look at Bitcoin. And this is a downtrend that we can see here, a recent downtrend. And we can see there's a perfect touch of it. It starts with the touch of the candle wick here, and another touch of the candle wick here. And we can see here it crosses perfectly at the top of the candle body there. And this is a fake out, so exactly what I was talking about a moment ago. So this means that during the day, the price did move above the trend line, looking like a possible breakout. However, by the end of the day, it closed back within the trend and it continued its move down. So this was a fake out and a downtrend was maintained. Here, the downtrend was broken. We can see that the candle this day closed above the trend line. And yeah, that signaled a break of the downtrend, and we started a move up there. Another chart here, also on the 1 day time frame. This is Chainlink, and we've got 2 lines here. We've got a support trend line at the bottom, a resistance trend line at the top. So looking at the support, we can see a touch here, 2, 3, quite spread out. Again, we saw a slight fake out here where it moved below, but the candle closed above that, so the trend line stayed intact. And then for the resistance, very well spread out. This is over a period of a couple of years actually. And we've got 3 touches there, perfect touches, so very strong resistance trend line there. We can see how sometimes a support trend line can turn into a resistance trend line, and also a resistance trend line can become a support trend line. And we saw that with Chainlink at the start of January. So the support trend line failed here when all of crypto saw a big sell-off. So it moved down, and as it then bounced back, we can see that when it came to the previous support trend line, it rejected that area to continue a move down. So if you were looking at this point for a trade, you could be looking at a short perhaps. When it moved back up to this trend line, this could be a potential area to short, because it's likely that this has now become an area of resistance. And the same thing, resistance could turn into support. So for example, had this broken above this here, we could have moved right up. We could have then come back to test this area to turn this into support before a continued move up. So what I would do, guys, if you're new to Trendlines, just take half an hour, pull up TradingView or whatever program you use, and just practice drawing lines and notice how the prices move off of those lines, as the trends develop. So I hope this video was helpful. What we're going to do, the next video, we're going to be looking at support and resistance levels because it ties in really well with this. Thanks for watching, and I'll see you then.